Well, good evening, everyone, and thank you so much for joining us for our Impact Financial Literacy Workshop this evening. We are so excited. The holidays are here, and everyone is getting into their holiday spirit. However, after the holidays, it's one of the most dreaded times of the year. And you guys know exactly what I am talking about: tax season. Okay, tax season comes up right after the holidays and it's so stressful. You got to try to gather all these documents and they're always changing things, and it's so hard to just keep up with that when you have so much other things going on. So tonight we're going to be giving you some tips so that you can get ahead of the curve and that you can be ready for this tax season coming up. And we're going to have the privilege of having Kismet Madison speak to us tonight. And I'm just going to share a little bit of information about her. Let's see here. And I'm going to show this picture for you guys. Let's see. Okay, guys, I'm not going to be able to show the picture. I'm trying to put it up there and it takes me off. So, hey, that's all right. I will tell you about her. She has over 20 years experience. She's an enrolled agent with the IRS. And if you are wondering what in the world is an enrolled agent, she's going to educate you on that title tonight. She is someone who's a woman of faith, and she has been a great asset to her community, in her church, as well as out in other places abroad. She has helped me personally with my taxes and a host of people that I know. So she's definitely someone that is knowledgeable, who's able to break it down, and she just she really loves what she does. You're gonna see her passion come through tonight. So I'm not gonna hold you anymore. I'm gonna go ahead and bring her on and let her take the show. So, Kismet, good evening. Good evening. Are you all ready to tell us all about how we can get ready for this upcoming tax season?
Absolutely. I'm excited. It's the most wonderful time of the year for me.
Absolutely.
So, Serena, thank you so much for the opportunity to come on and to speak to your audience about taxes and the upcoming changes and updates and everything that's happening. Again, my name is Kismet Madison. I have 20 years of tax experience. I've been an enrolled agent for 4 years, and my specialty is tax preparation and tax resolution. So that's my focus: taxes and helping people deal with the IRS issues that they come across. So, what is an enrolled agent? As an enrolled agent, I am licensed to practice and represent people before the IRS. So when you get those IRS letters, if you need to get into an installment agreement, if you need to amend a return or get compliant or do an offer and compromise, those are the things that I can help you do because I'm an enrolled agent. And also, when you have an enrolled agent do your tax returns, the IRS, I'm not going to say they don't look at it as much, but they don't look at it as much because I've had to take exams given by the IRS to get this status. And because I am an enrolled agent, I have to have 72 hours of continuing education every 3 years in order to keep that designation. So that breaks down to roughly 24 hours per year that I have to maintain in order to keep this specialized privilege given to the IRS, which also means not only can I help people in Virginia, but I can help people wherever they're at. Currently, I have clients in Spain, Denmark, Hawaii, Florida, Texas, Colorado, Ohio, Michigan, and the list goes on. So I can literally help you wherever you're at in the United States or abroad. So, some dates that are coming up that we want to know. First of all, everybody's like, oh my gosh, when is the IRS going to start accepting tax returns? The IRS is not going to start accepting tax returns. The estimated date is January 31st. Could it be extended like last year? Yeah, especially if they go ahead and do some law changes at the very last minute like they did last year. But right now, it's anticipated that they're going to actually start accepting filed returns January 31st. For those that get the earned income credit and the additional child tax credit, they probably will not begin accepting those till mid February, which pushes your refund to the 1st of March, middle of March, for those that are getting the earned income credit and the child tax credit. As of right now, the filing deadline is April 15th, but as we know, over the last 2 years, that has been extended. I am anticipating them extending the deadline for those individuals that have been affected by those tornadoes in Kentucky and up through the Midwest as of last week. Um, so that's just some things to think about. Okay. So you don't have to rush to get everything in. You can take your time because your employers, the banks, your financial institutions, they actually have to January 31st to mail out all of your documents. So you want to wait. And as you're getting those documents, it's very helpful to have a folder, a manila folder or a drawer that you're putting everything in. Because if you file and then more income comes in, and you don't amend that return, then you're going to get a letter from the IRS saying you owe a lot of money and penalties and interest. So it's best just to wait, make sure you have everything, and then file an absolute correct return. Once you file the return, you want to electronically file the return, first of all. Putting it in the mail is death. It's going to take forever for the IRS to get that return and to actually process it. I know people that mailed their returns a year and a half ago and they're still waiting. Because when the pandemic hit us, it also hit the IRS. They actually did not open mail for almost a whole year. So they're still going through all of that. So the best way to file your tax return is electronically. The best way to track your refund is to go to irs.gov, where's my refund, or you can actually go and download the IRS to go app. That's the best way to track your refund. Calling the IRS and sitting on the phone for 2 hours, this is easier. This is easier, and they update it daily. So that's the best way for you to keep track of your refund. So some tax updates for 2022. We all know that in 2018 they kind of doubled the standard deductions. So the standard deductions for 2022, if you are married filing joint, your standard deduction is 25,100. If you are single or married filing separate, your deduction is going to be 12,550. And if you file as head of household, your standard deduction is 18,800. So for those of you that itemize, and that's itemizing is where you try to go above what the standard deduction is. So with itemizing, you get to take mortgage interest, real estate taxes. Sometimes you can use medical, charitable donations, and also mileage. So, charitable mileage, if you're active in your church like I am, you can keep track of that mileage, and it's 14 cents a mile. That adds up if you're doing a lot of running around for the church. You can also claim medical miles, mileage going to and from the doctor, taking your children to and from the doctor, going to the drugstore, all that kind of stuff. That's 16 cents a mile. And again, that adds up to help get you over the 7.5% that where you can claim the rest of your medical. Just some things to think about. If you have an IRA and you're coming of age, they've changed the date where you have to take a required minimum distribution. It used to be 70 and a half, but they've recently updated it. So now you are not required to take any type of disbursement from your IRA until you're age 72. And that is huge because a lot of people are continuing to work well after 65 into their 70s. So that is a major thing. The next thing we're going to talk about is the recovery rebate credit. So, credit is if you didn't get the stimulus payments, because some people are like, I never got them. I never got them. How can I get that money? Important thing. Another important date. If you haven't gotten the first and second stimulus payment because you did not file your tax return or they haven't processed it, you have to December 31st to get that tax return filed. You cannot e-file at this time, but what you can do is you can submit a paper return and make sure you do certified mail with a return receipt. That way you have absolute proof as to when it was filed, and if you do return receipt, they'll actually sign it saying that they've received it. Now, will it take you forever to get that return? Absolutely, but that could be a big chunk of money for those that haven't yet gotten that first and second stimulus payment. For those that haven't gotten this third one, the third one, excuse me, was the $1,400 stimulus payment that was received right at the beginning of the year. So late January, 1st of February. On your 2021 tax return, there will be a recovery rebate. So if you say, well, I don't remember if I got it, I don't know. What everybody needs to do is go to irs.gov and set up an online account. It's free. Setting up an online account is another way where you can see what letters have been sent, what money you've received as far as stimulus money, what money you've received as far as any advanced child tax credit. If you owe any taxes, you can pull wage transcripts, you can pull tax transcripts. So it is very helpful to have that online account, and it's an easier way to uh, get information from the IRS. So please, please, please go to irs.gov and set up that online account and see, double check, because I do know that there have been people that said, I didn't get it, and they forgot that they got it. And then the IRS, it took them even longer to get their money because the IRS had to back that recovery rebate credit off. And some people thought, hey, I get a refund. And then sometimes they owe because of the backing out of that. So you want to make sure that you have a count of all the stimulus money that you did or didn't receive. There is phase outs for the stimulus payments. Some people are like, well, I didn't get it. Well, for single, if you made between 75,000 and 80,000, you're phased out. So 75,000, it starts going down. By 80,000, it's at zero. For head of household, if you made 112,500 to 120,000, that's the phase out. And for married filing joint, the phase outs, it begins to phase out at 150 and it's totally phased out at 160,000. So that's just something for you to think about as you're preparing to do your tax returns. The next thing is earned income credit. It's changed just a little bit this year. They've changed the limitations so that more people can actually get the earned income credit. So some of the age limits have changed. It used to be you had to be 24 in order to claim it if you didn't have any children. That's been adjusted now so that if you're 18 with no children and you meet other qualifications, you could possibly get earned income credit. And then another thing that I want you to keep in mind for the earned income credit, if your income in 2021 is less than your income in 2019, for this year, you can use that 2019 income to give you a larger earned income credit. So they're allowing you to go back in order to give you the larger credit. Now, if you haven't filed your 2019, you need to get that done. But if your income in 2019 gives you more of a credit than your 2021 income, they're going to allow you to use that. Okay? So that is earned income credit. I'm sorry, I'm going a little bit out of turn. I'm sorry, Serena. The child tax credit. So this is big because a lot of us are getting the advanced child tax credit. So there was an increase for the child tax credit, and for 6 years and older up to age 17, which it was 16, and I'm happy about that. So I get to carry another one of my kids for another year, so praise God for that. So for 6 to 17 years old, you get $3,000. If the child is under 6 years old, you get $3,600. With the advanced child tax credit, it is being based on your income from 2020 or 2019, depending on which was your last filed return. You can get up to half of that on your tax return. Up to half of that between July and December. So a lot of people are like, well, I'm going to end up owing. Not necessarily, because the difference really on what you're claiming on your tax return is only $500, because the child tax credit was 2000 per child before, and now it's jumped up. So if you got the full 1500, the difference is only $500. So you won't necessarily owe. There is going to be a reconciling on the tax return. So similar to the questions that you had last year about did you receive the recovery, the stimulus payments, is going to ask you, there's going to be a question on the tax return and a form to reconcile how much child tax credit you received in advance and how much you were actually due based on your income for 2021. So there is a slim possibility that some people may have to pay some of that back, but I'm not thinking it's going to be a large amount of people that have to do that. So that's something to keep in mind. Serena, do we have any questions? Okay. All right. So there is do
Hold
we
on
have
really quick.
okay,
We do have one question.
sure.
Someone said, with the medical miles, can you deduct mileage when you are the person transporting a household member back and forth, as well as visiting them, if they're in the hospital, like if they have a chronic illness or going to get prescriptions or other medical items they need? Can you deduct that mileage as well?
Absolutely. Absolutely you can. You absolutely can.
Okay,
So,
perfect. So they just need to keep a journal or
record.
some sort of record of each trip and how many miles it was. One
So
more. Hmm.
it's real easy with the mileage. Get a mileage app. Get a mileage app. They cost relatively nothing, and they're always running in the background. And then you can just swipe left or right if it's medical, if it's charity, if it's personal, and that you can print off at the end of the year, as long as you have a contemporaneous record of your mileages and that, then you're good with the IRS.
Okay, awesome. One other question is, for the tax for the higher earned income credit, you previously stated that you can go back to your 2019 return if that gives you a larger credit. The question is, can you go back to the 2020 return as well, or is it only 2019?
As of now, it's just 2019. They're not allowing you to go back to 2020. I don't know why. Maybe because of the pandemic, there a lot of people didn't have a higher income for 2020, so they're allowing you to go back to the last normal year, which is 2019.
Okay, awesome. So those are all of the questions right now.
Awesome. You guys have some really good questions. So, With the child tax credit, again, your child has to be eligible. Oh, okay. Yeah. So, I'm sorry, I lost my place. If you have a disabled child, that child will also qualify you no matter how old they are. If they are disabled, that child will qualify for the child tax credit. So the next big thing is the child dependent care credit. So daycare. And I know a lot of people are like, well, I don't want to claim my daycare. It doesn't really do much for me anyway. I make too much money. I never get the credit. Well, that has changed. So, first thing, before the child independent care credit could only help you take your tax liability to zero, and it was not refundable. Now it's a refundable credit. So even if you don't have a tax liability, if you had child independent care costs, you can get a refundable credit. So now it falls into the same category as your earned income credit and your additional child tax credit. Okay. So also, it went from 35% of the expense to 50% of the expense for eligible expenses. So before it was the maximum you could get would be 3,000 per child, up to two children. Now it's 4,000 per child, up to two children. So that could actually give you an $8,000 tax credit. That's huge. That's more money than most of the earned income credits, okay? Now, the biggest thing is that they've upped the income threshold. So before, if you made around 15, 20,000, after about 25 you didn't qualify for the credit. They've upped the income to 125,000. So those of us that are making 45, 50, 60,000, we now qualify for this credit. And again, it's a refundable credit. Or at the very most, it's going to take your tax liability down so that you still get a larger refund because of the taxes you've paid through your W-2 employment. So get your child care information. I don't care if Susie May is watching your kid. Get her address and get her social security number and how much you've paid her. Either keep the receipts or have her write you a letter. It's important, it's huge. This is going to help a lot of people. Spread the word for whoever's not on here. You can get credit for your daycare costs for your children, and that's children up to the age of 13. Okay. All right. So I was really excited when I learned about that. Oh, one more thing. This isn't on my list, Serena, but if you have a 529 plan for your child, I know some people are like, oh, I wish we could use this for private school for my child, not just college. Now you can. If you have a 529 plan, you can use those monies to um, pay for elementary school and secondary school. I wish they had this when my oldest was growing up. She's 25 now. I wanted her to go to Norfolk Christian so bad, but I could not afford it. But if I would have known about putting money away so that she could have done that, d- changes everything. Changes everything. So, what a great gift to give to a child. Start them a 529 plan. It helps the parents, it helps the child. They can use it to go to school when they're starting or for college. Good thing to do. So that's that. So another thing that started last year is they allowed for people that did not itemize to claim a $300 charitable donation, up to $300. So a lot of times people are like, well, I tithe, but my tithe isn't enough to it, have me itemized. So what they're doing this year is they're still going to keep that. But if you're married filing joint, you get to claim it twice. So you get 300 for you and 300 for your spouse. Last year it was just 300 no matter if you filed single or married filing joint. So you get to claim up to $600 above board, which is going to help reduce your taxable income. That's where that's going to fall in. It's going to fall on the front side of your 1040 and help you reduce your taxable income before you start calculating taxes. So that's a good thing. Now, what do you do if you owe? The best thing to do is to submit the payment with the tax return. That you can, most of the time, your tax professional, H&R Block, TurboTax, all of that, they'll allow you to set up a direct draft. If you cannot afford the direct draft, you want to file the return. Once they get acknowledgement that the return has been filed, you can go to your online account and go ahead and start making a payment arrangement. If you owe under $50,000, you can make a payment direct arrangement online through the IRS for about 50 bucks. If you talk to a real person to set up an installment agreement, you're going to pay 200 the fee is $225. $50 versus $225. I think I'm going to do it online. So if you, the IRS has 10 years to collect on a debt. Now, let's say that something comes up and you've lost your job or what have you. There is a thing called currently not collectible. So we could petition the IRS to put you in a non collectible status for up to 2 years. Now, that does not make the tax go away. It Penalties and interest still accrue, but they can't collect on you for 2 years while you try to get things together. If you get a letter from the IRS, please open it. Don't just throw it in a box or don't say, I don't know what to do with this. The IRS is always going to give you an opportunity to dispute what they're saying or to ask a question or to respond. They're always going to give you at least 30 days to respond. And they're going to say, do you agree? Do you disagree? Why do you disagree? Here, we need some additional information. So please open the letters. If you don't know what to do with them, get with someone who does. So you can reach out to me, or if you have a trusted tax preparer or CPA that you've been working with for years, reach out to them. Let them help you through the craziness that is the IRS. And so that is all I have for today. I would love to sit down and speak with you. Those that are on the call today, I am offering a 30-minute free consultation, either phone, Zoom, or in person with me for just attending today. I'll be glad to see how I could help you out. Serena, do we have any other questions?
Okay, so first of all, thank you because this has just been so enlightening. I know that even for myself, it's like, wow, this is a lot of great information. The question that we have is, are you saying that the $300 charitable tax credit is in addition to the standard deduction for people that do not itemize?
Absolutely. Absolutely. It started last year and so you get your standard deduction and then you also if you've given, so you want to make sure that you have receipts, either a church letter or the receipts from the football club or whatever, saying that you've given up to $300, but that's in addition to the standard deduction.
Okay, awesome, awesome. That was our last question for this evening. So, if someone out there is looking to get in touch with you, what would be the best way for them to do that?
You can reach me on my cell. My number is 804 221 6855, or you can reach me through email kismet.madison@tbcassociates.com.
Okay, awesome. So, are you on any social media at this time that they can reach out to you on? You on Facebook or LinkedIn?
I am on LinkedIn too. I forgot all about that. I'm still working this social media, y'all. So I am on LinkedIn under Kismet Madison, and then on Facebook you can go to TBC and Associates. That is my Facebook business page, and you can reach out to me there as well.
Okay, fabulous. So, you guys, we hope that this information has been something that you can really use. We don't want you just to get the information and then just say, oh, that was good. She gave a great talk. We want you to use the information because knowledge is power, but it's only when it's applied that it can
Amen.
truly be as powerful as it's intended to be. So, if you're afraid, after all this great information, you still feel afraid, you're nervous, you're overwhelmed. Again, you can reach out to Kismet directly. This is her number. She wants you to call her. She's giving you a free 30-minute consultation with someone who has to, stay up to date with the changes in the tax code. I definitely think it would be worth your while to take her up on this free consultation. Again, there's her email address. And just know that you are never alone. Okay. We know that finances can be scary sometimes, guys. And that's why we're doing these workshops so that we can empower you, we can educate you, and we can let you know that even if it's something you're not familiar with, there's people that will work with you and make sure that you are more knowledgeable as you go through the process. So we want to teach you how to fish. We're not just going to give you
Amen.
a fish, we're going to teach you so you can eat forever and pass those things down to your kids because it's our mission here at Impact to break those chains of financial bondage so that we can live in the life that we were truly designed to live in. So we are just excited that you joined us tonight. We're going to be back. Our next one, we won't be doing January. We'll be doing something in February, another great financial literacy workshop. We will be getting out the information sometime within the next couple of weeks so that you can register for that as well. If you have any questions or if you have any insight on topics you might want us to talk about for February, please put it in the comments. We will love to see what you guys are thinking, and we can definitely keep this conversation going. So, Kismet, thank you again for coming out tonight.
Thank
And
you.
you guys have a blessed and victorious holiday.